How's it going, everyone? My name is Hank and welcome back to the channel. So today I'm going to be talking about some companies that you could invest in order to beat or maybe at least keep up with inflation. Now, in my last video, I've talked about how inflation is at a 30-year high, and rightfully everyone is pretty concerned about the high inflation figures. Now, in this type of environment with the prices of everything going up, now, what could we invest in order to keep up with inflation? Holding cash all the time is not a good option because the price of everything is going up and that lowers your purchasing power. Now, the most common thing that people tend to do is to put money into real estate. But unless you already have a significant amount of money saved up, you probably won't be able to do that. What about investing in company stocks? Now, during high inflation environment, reserve banks for most countries tend to raise interest rates, making borrowing money more expensive in order to lower the inflation. Now, this is something that tends to hurt growth companies the most, especially more than the blue chip companies, since growth companies usually borrow a lot of money to try to gain market share in the early stages of their startup. So often growth companies are not profitable for a long period of time, especially in the beginning. And this is extremely bad in an inflationary environment. So another commonly suggested option is to invest in dividend-paying companies. The most popular of the dividend-paying companies are the Dividend Aristocrats, which honestly isn't a bad option to invest in if you want to go for that. So the Dividend Aristocrats are a special group of companies in the S&P 500 that have paid and raised their dividends for at least 25 consecutive years. Now, they including big name companies such as 3M, Johnson & Johnson, Coca-Cola, amongst many others. So these days, you don't need to buy those companies individually. There's pretty much an ETF for everything out there. For example, the ProShares S&P 500 Dividend Aristocrats ETF with the symbol NOBL. It's one ETF that covers all 60 plus Dividend Aristocrat companies, so you don't have to buy them individually. All you need to do is buy the one ETF. However, there's just one small problem. The dividend yields for these Dividend Aristocrats are really not that high. If we look at the dividend yield of the Dividend Aristocrat ETFs, it's only around 2%, and honestly, it's really not that much. And it's significantly lower than inflation. So you're not going to beat inflation like that. Therefore, I wanted to dig a little bit deeper to see if there's some companies that have a little bit more potential. And I really hesitate whether I should post it or not. Now, one of the companies that I found pays out more than 8% dividend yield, has a long history of paying dividends, but carries some potentially significant baggage. The company that I am referring to is Altria Group with the symbol MO. So most of you at this time will be like, who on earth are they? Haven't really heard of them. So they used to be part of the Philip Morris Group that split up into Philip Morris International with the symbol PM and Altria Group with the symbol MO. Now, they split up more than 10 years ago into two separate companies, each with slightly different business focus. So Altria was focused on the US market, while Philip Morris International focused more on the international markets. Essentially, they are two of the world's biggest tobacco companies out there, and this is where the video will probably not get monetized anymore. Anyways, despite the declining sales worldwide, both Altria and PM are now investing into alternatives to the traditional tobacco, including many e-vape related products in order to diversify and pivot away from their traditional core business because the sales are declining, so they can continue on growing. So during recession times, people tend to cut back a little bit on luxury goods, such as new cars, branded goods, and traveling overseas. But that doesn't stop the consumption of a lot of these what's considered as sin products, such as tobacco and alcohol. So there's still tremendous potential for returns in those sectors. Altria has a very high dividend yield of more than 8% and an average of more than 6% yield over the past 5 years. Now this is considered very high when it comes to dividend paying companies. They have a payout ratio of more than 80% over the past 5 years. Now this high payout ratio shows that they're pretty focused on paying out dividends to the shareholders. PM, on the other hand, has a dividend yield of more than 5%, a little bit less than Altria, but it's still pretty good. The payout ratio is also over 80% over the past 5 years. So overall, PM is the bigger company of the two, with a larger international market, higher earnings, and probably a higher potential for growth if that's what you're looking for. Now, this potential is especially great for the Asian market, where China contributes to more than 28% of the world's smoking population, followed by India at around 10%. Altria has better cash flow and pays a higher dividend, which obviously is very important for a lot of people. So if you're more interested in pure dividend returns, Altria might be the better option for you. If we look at the charts for Altria, Altria has been in a downtrend for the past couple of years, even before the pandemic. Whereas PM had a similar drop-off in the share price before the pandemic, but had a much better bounce back in the 2 years following the pandemic lows. With these dividend companies that have consistently paid out dividends for many years, now we should not only look at the share price, but also the total returns that you get when you reinvest the dividends that you receive. By reinvesting the dividends, you're letting compound interest work in your favor, and you'll get a significantly higher return. For example, if you invested in Altria Group for $1,000 20 years ago, you'll end up with a return after reinvesting dividends of around $13,000, or a 13% annual return, which is not too bad for a dividend paying company, especially since we know that dividend paying companies don't tend to have as high share price growth when compared to the tech growth companies. So just as a disclaimer, I do not personally own any positions in Altria or PM, and I'm not suggesting that you should purchase these stocks. And of course, past results does not indicate future success. No, it's just that the stocks have consistently paid out high dividends and have been a staple for many dividend-focused portfolios and ETFs. And I mean, I did hesitate to actually make a video on these stocks because they don't really fit the current ESG trend of environmental, social, and governance companies. Now, they're not really considered a green investment, but I think it's important to let people know of all of the options out there. So whether or not you should invest in them should be completely up to you.